Okay, so let's dive right in. The natural gas giant EQT just had an absolutely massive year, and we're about to break down exactly how they pulled it off and what this incredible performance could mean for the future of American energy.
And you don't have to look very far to get the main story. The president and CEO, Toby Rice, he laid it out pretty clearly. 2025 was outstanding. And the bottom line, all that outperformance is driving real, tangible value right back to shareholders. But what does outstanding actually look like when you crunch the numbers? Well, when you put this year's results right next to last year's, wow, the difference is pretty staggering. Okay, and this is where the story gets really, really interesting. I mean, look at that free cash flow number. It didn't just go up, it absolutely exploded, jumping by more than $1.8 billion. And net income, same story, another massive increase. We're not talking about small incremental gains here. This is a complete transformation of the company's profitability, all in just 1 year.
Now, we're going to be talking about free cash flow a lot, so it's super important to know what it is. The simplest way to think about it, it's the cash a company has left over after paying all its bills and, reinvesting in itself. It's really the ultimate sign of a healthy, profitable business.
So, what was the secret sauce? How did they pull off such a huge year? Well, it wasn't just luck. It came down to a really well-executed game plan that focused on two main things: being excellent at what they do, operational excellence, and just having a knack for performing when the pressure is on.
A perfect example? Just look at how they handled Winter Storm Fern. While that crazy weather was crippling the whole region, EQT's operations turned out to be twice as reliable as their competitors. Now, what does that mean? It means they not only kept the lights on for their customers, which is huge, but they also got to take advantage of those premium energy prices when supply was at its tightest. And that kind of resilience wasn't a fluke. Nope, it was the direct result of them just smashing their own operational records. So let's look at 3 record-breaking numbers that really tell the story of their incredible efficiency.
First up, costs. They got smarter with their operations and managed to slash the cost of developing each well by a full 13% compared to the year before. I mean, that is pure, unadulterated efficiency.
Second, this wasn't just about saving money in the short term. They were also investing in their future. They actually grew their proved natural gas reserves by 7%. That's basically like adding a whole lot more fuel to their tank for the years to come.
And the result of all of this? The big payoff? A mind-blowing $744 million in free cash flow in the final quarter alone. It's the perfect showcase of how being super efficient on the ground translates directly into massive financial firepower.
Okay, so having one great year is one thing, right? But building a great future is a totally different ballgame. So how is EQT using all this success? Well, it looks like they're making 3 big strategic bets. Their first bet is all about financial health. They've been super aggressive about paying down their debt, wiping out nearly $1.4 billion of it in just 1 year. That makes the company way less risky and gives them a ton more flexibility to handle the ups and downs of the energy market.
Okay, their second bet is on infrastructure. I mean, think about it. You can have all the gas in the world, but it's pretty much worthless if you can't get it to your customers, right? That's exactly why they've doubled down on their investment in the Mountain Valley Pipeline, bumping up their ownership to make sure they have a solid, critical path to market.
And their third bet is all about creating stability. To protect themselves from those wild, unpredictable price swings in the market, they've seriously increased their financial hedges for 2026. You can think of it like buying price insurance. They've now locked in a guaranteed price for a full quarter of their future production. That is a huge jump from just 7% before. So, with all this momentum, what's next? What does the road ahead look like? Well, EQT has laid out a really clear and, frankly, very ambitious forecast for 2026.
So their spending plan really shows a two-pronged approach. First, you've got about $2.1 billion just to keep the current machine running smoothly. That's maintenance. But they're also playing offense, right? They've set aside another $600 million specifically for new projects, ones designed for high-growth returns.
And these projections, they are seriously ambitious. They're expecting free cash flow to rocket up to around $3.5 billion. And get this, they plan to do that while also continuing to pay down debt, aiming to slash it all the way down to $4.7 billion. That's a plan that's really aiming for the best of both worlds, growth and stability.
So all of this brings us to one big final question.
EQT has built this incredible financial fortress, and they've secured their path to market. But in an era where everyone's talking about the energy transition, are these huge strategic bets on natural gas going to make them a dominant force for decades to come, or are they just doubling down on the past? Their performance over this next year could give us the answer.